What is going on with the Oracle of Omaha? In just the last few months, the chief whip of Berkshire Hathaway and one of the richest men in the world has been an overall net seller of stocks in the market. And we're not talking a couple $1,000s or a couple of million. This year, Warren Buffett has sold a total of $93 billion in stocks in the market, including some of his biggest holdings that most of us probably hold ourselves, like Apple or Bank of America. So what does that mean for those companies, for Berkshire Hathaway, and what exactly is Warren Buffett trying to tell us about what will happen next to the market? We need to get into this one, so let's get started. If you had invested just $1,000 in Berkshire Hathaway in 1965 when Buffett bought it, then today you would have holdings of more than $42 million, which is a return of 5.5 million% compared to the S&P 500 return of 38,400%. So naturally, when Warren Buffett talks, the world listens, and lately the world has been listening very closely because he has been making some very big moves, and it's left a lot of people wondering why, wondering what he knows that we don't, and wondering if this is an indicator of things that are to come. So we're going to break it all down and look at history to give us an indicator of what we can expect in the years following when Berkshire has been a net seller of stocks, and luckily we have 59 years to look back on. So, according to the 13F forms that Berkshire files quarterly, we can see that they spent $4.3 billion actually buying shares this year. And one of those shares he's buying, I'll tell you about at the end of the video. And of course, $97.1 billion of stocks sold, giving us the $93 billion in net sales, which is a company record for net sales and could possibly be an indicator that there are limited buying opportunities in the market or that there is a possible drawdown to come. And net sales means that overall he sold more stocks than he bought in that year. So we went to the Oracle and he gave us possibly a hint into the future of what we can expect in the markets in the next years. However, it's actually not really that simple and might not be what it seems. Because as much as Buffett has outperformed the market by a large margin, him being a net seller of stocks in the year is not automatically a signal that the market is going to go down or stay stagnant. In fact, you'll be shocked to know it's actually, well, it's the opposite. So we pulled some data from Motley Fool, and it turns out that overall, in the year after Buffett has been a net seller, the market has gone up. This here is a table showing the years from when he was first a net seller in 2010, how much he sold net that year, and the next column is the returns of the S&P 500 in the following year. As you can see, it went down twice, stayed the same once, and went up 4 times, and the amounts it went up by dwarfed the amounts it declined, so that the median change in the stock market the year after Berkshire was a net seller is a profit of 19%. And if you think that's interesting, then here is a table showing the years since 2010 that Buffett was a net buyer of stocks. And as you can see, the markets dropped one year and were up the rest. But interestingly, the median return of the markets in the next year is only 13%. So overall, the markets have performed better in the year following him being a net seller than when he was a net buyer. So maybe all of this is actually a good thing. As we all know, the past doesn't always predict the future, but can give us some information on what could happen. But the bottom line is that Buffett has actually been a net seller for many years in the last 2 decades, and the market has continued to gain and grow and actually gain more in the year after he was a net seller. Now, what is the reason for Buffett selling so much money in these stocks? Well, until we hear from him directly, it's hard to know. As a recent shareholder in Apple, my holdings in a profit of 8.4%, and the stock is up a massive 37% in the last 6 months. And as for Bank of America, they are up a huge 21% in the last 6 months. Now, I am no Warren Buffett, not by a long shot, but over the last 3 years, I've been able to build a portfolio of about $20,000, and between share gains, dividends, and interest, I've been able to make $6,900 in profit, with almost every share in profit and some over 50% in gains. So if you're looking for ideas on what stocks to buy or how to grow your portfolio, you might want to check out the Casual Cash Club on Patreon. There's a special feature you can use where you go to collections and then investments, buying and selling, and you can scroll through all 43 posts showing every single stock I've bought and sold and why in the last 2 years to get to that $6,900 profit. It's also got tips and tricks, market news, ebooks, and portfolio updates every month. And best of all, you get a 7-day trial for free. So if you want to join our other 94 members, then click the link in the description to claim your 7 days free trial for the Casual Cash Club. So, we talked about Apple growing 37% in the last 6 months and Bank of America growing 21% in the same time. And because Berkshire Hathaway's average return over 56 years is 19% a year compounded, then with those share price numbers, it doesn't seem to be a lack of performance as a reason to sell. Perhaps it's because the market is priced higher than usual. The S&P 500 is currently trading at 21.4 times forward earnings, which is higher than its 10-year average of 18 times. So all the recent growth has definitely been factored into the market and is trading higher than its normal. But even with the sales, Berkshire is still buying some companies, such as the $86.7 million in Sirius XM Holdings, which is a radio broadcasting company in the USA, and it's actually around 58% down over the last 5 years and has a quite depressing looking price graph. But as you know, many of my best investments have come after some big drops in price. So perhaps Sirius is a good opportunity to look at further and possibly capitalize on while it's low. But as with all of these investments and sales Warren is making, only time will tell. But what I've taken away from all of this is that just because Berkshire is a net seller this year, it doesn't automatically mean it's an indicator of the market going down. In fact, historically, it's an indicator that on average the market has gone up by 19%. But with their investment in Sirius, what that tells me is that even if the market should go down, it could be an opportunity to buy more for your portfolio at a better price and perhaps better returns. And we'll just have to see what Mr. Buffett has to say in his next shareholder meeting. So if you've been seeing the headlines, I'm curious to know what your thoughts and opinions are on all of this in the comments. Do you think Buffett knows something we don't? Or like me, are you going to keep investing and growing your portfolio as usual through the market ups and downs to keep growing your wealth? But that's it for today's video. Thank you for watching. Please like the video and subscribe to see more. And remember to claim your 7-day free trial for the Casual Cash Club to see all my real-time investments. But until then, I'll see you guys next time, as always, on Casual Cash. Cheers.